Hello guys, Susan Juguna here, and as usual, I'm here to talk to you about money. And if you have been following me, you already know that money market funds can earn you much higher returns with the same level of security as your savings account, right? And we're talking about huge difference in interest rates. And today, I would demonstrate this with numbers. So make sure that you stick around to see the difference because I think money market funds should be your first investment choice. So today I want us to look at the benefits of investing in a money market fund. And so far we have already covered what money market funds are, the risks involved in money market funds, and how to choose the right money market funds for yourself. If you have not watched those videos, make sure you go through them because it's not good to take chances on your money. You need to know what you are getting yourself into. So make sure that you watch those videos. So let's look at why money market funds should be your first investment choice. I love this analogy that keeping all your money in a savings account or failing to invest your money is like having a very powerful car but never driving above 20 kilometers per hour. Imagine that you have a very powerful car, but you're just driving it at 20, at bare minimum. So that's what is happening with your money if you're just keeping it in a savings account or you're failing to invest in some of these investments that we keep talking about. So your money could be working so much harder for you, and that's what is called investing. And this is having money working for you, and this is where we all want to go, right? So if that is you have not been utilizing your powerful car, you need to watch this video till the end because I think I might change your mind on that. So in the next few minutes, I'll show you why money market funds should be your first step or maybe a part of your investment. We will include some calculation to show you what you might be missing if you're not on board yet. And for those who know the truth, drop a comment in the comment section because it will help a lot of people because investing requires assessing some reviews, and we have talked about that before. So we'll just go straight on to our topic. And number one, money market funds offer higher returns than traditional savings. And let me break this down with numbers, as I mentioned. So a regular savings account offers you 2 to 3% per year, that is interest rates, while money market funds, they offer you 9 to 16% per year. Okay, and let's take this a notch higher with an amount like 100,000 Kenya shillings. So in a savings account, you are 100,000 Kenya shillings in a savings account that offers 2.5% per year. You are going to get 2,500 at the end of the year. While in an MMF, let's say even we take an interest rate that is not too high, we do 10%. Remember, you can get more than this. We put it in an MMF that is offering 10%. Then you are 100,000 will have gained 10,000 per year, and that one we have not included compound interest, so it will be higher than that. So comparing this with your savings account, it would mean that you have an extra of 7,500 in your pocket or more. I want that to sink in. See the difference and make a choice for yourself. Number two, benefit of money market fund: they are low risk and high safety. Money market funds, as we have mentioned so many times, they are regulated by the Capital Market Authority, CMA. And we also have what you call custodians and trustees to make sure that these money market funds or the fund manager are operating within the regulation or the guidelines by the CMA. So your money is invested in government securities and top-rated corporate papers, meaning that they are very diversified, making them very safe. and low risk. Then the fund managers are required to maintain strict investment guidelines, as we have mentioned, by the CMA guidelines, by the CMA, and to make sure that they follow this, we have what we call trustees. And on top of that, the money that you giving the fund manager is not held by the fund manager themselves, it is held by the custodians, which are usually big banks here in Kenya or wherever you have opened the account at. Okay, so number 3 benefit of money market fund is excellent liquidity. You have access to your money within 1 or 2 business days. It's not a long-term commitment, and anytime that you need your money, you can get your money so long as you give it 1 to 2 business days. And this is very perfect for an emergency fund because you can access your money when you need it. So if you have an emergency fund or you have some cash in a savings somewhere saved, you can put it in a money market fund because you can access that money and still be earning some interest on top of that. So if you request for a withdrawal, let's say of 50,000 Kenya shillings from an MMF on Monday, you can have it by Tuesday or Wednesday. So it is very liquid cash. Yeah. Number 4, it is a low minimum investment option. Maybe you might not be having the 100K or the 50K to start investing. You can start with what you have, with as little as 100, 500 or 1,000 bob. You can start investing in money market funds, and that is the beauty of it. You don't have to have a lot for you to start. And here's the trick. The trick is to keep adding small amounts regularly to your account, even 100 bob, until you get where you want to be. Remember, little drops make the mighty ocean, and don't forget or don't focus so much on what you are getting right now. Just focus on where you want to be, and you have a way to accumulate your money while still earning some extra cash, and your money is not losing value due to inflation. And with this, in no time, you will have enough to invest in other big opportunities. So just keep going. And then number 5, we have professional management. So in money market funds, you will have experts managing your money. They will do all the research for you and all the investment decisions for you, and your job is to only focus on your job or your business to keep adding to your account while your money grows, or even better, when your money is working for you. So, and then number 6, which is last but not least, money market funds are perfect complement to your income. Yeah, and I want to say this here. While you are going into money market funds, you need to know that it is not meant to replace your job or your business. As time goes by, this might replace your business as you get more money working for you and give you time to do other things. But for now, it complements your income. Okay? Think of it like this. So your job and your business is the engine that is generating the money you need to put in a money market fund. Okay? And then the money market fund or any other investment is the efficient fuel tank that stores and grows that money. We will talk about other investment options such as shares, bonds, bills, rates in later videos. So make sure you subscribe to my channel so that you can learn more about other investment. But for now, let's focus on money market funds and how you can grow your money with money market funds. And now let's do an example. A clear example. We take a lady, we give her name Sarah. So Sarah is a business owner. Let's say that she does mtumba clothes. So she saves 10,000 per month from her shop. We'll take 2 scenarios. One scenario is when Sarah is investing or putting her money in a savings account and earning 2.5% per annum. And then the other scenario is when Sarah is putting her money in a money market fund and topping it up every month, and we see the difference between what she will get after 1 year, and if she saved in a savings account, and what she would get in a money market fund is if she was saving her money in the money market fund. Okay, so if she's putting her money in a savings account, the savings account with 2.5% interest per year, her 10,000 contribution per month, at the end of 12 months it will be 120,000 Kenya shillings, and at the end of the year she will have 3,000 as the interest and after 1 year. So that is the total that she will have saved will be 123,000 Kenya shillings. So let's take it now look at if she saved that money in a money market fund. So the total contribution will be the same. She'll have contributed 120,000 Kenya shillings at the end of the year. And on top of that, if we do 10% returns per year, she will have 12,000 Kenya shillings on top. And that will give her the total amount that she'll be having is 132,000. And Sarah, in this case, will have earned an extra 9,000 just by making a smarter choice and putting her money in a money market fund. So you can see the difference between a savings account and a money market fund account. So if you are convinced that money market funds are right for you, and honestly, why wouldn't you? So make sure that you check out my video on how to choose the right money market fund, because I think that is the next step that you need. In that video, I'll walk you through everything you need to know to get started. And also remember, the journey of 1,000 miles begins with a single step. Let money market funds be the first step in your investment journey. And if you're new to money market funds, I got your back. And if you want to understand the basics, check out my previous video explaining what money market funds are. I will link it in the description below. I'll link all the 3 videos that I've done on money market funds so that you can go through them. And don't forget to like, subscribe, and share if you have found this video helpful. So make sure you also drop your question or a comment in the comment section below. I love hearing from you guys. And remember to stay smart with your money, and I'm out. Bye for now.